Oh, actually, I be forgetting this be acting up, and I don't know why. Sorry, YouTube. No one's in TikTok yet. But my window capture, I always have to restart it every time. I don't understand why it does that. Fuck. Hold on. Edit. Boom. There we go. There we go. Alrighty, I know some of y'all missed me yesterday. I didn't feel like streaming after my emotional day I had yesterday. Let's talk about it. Took my first loss. I posted a video about it, but just a dumb loss. We had a fair value gap on the 30-minute. No. We had, what did we have? Okay, yesterday it was we had this 30-minute gap to the downside that I said for sells we are inversing this, and then I said there was no buy side gap as you can see, but there was one on the 5-minute, and then I said if we inverse above this 5-minute gap here, we're in buys, basically. I called it, and I said we're just gonna wait it out. But what didn't I do? I got emotional. I did not wait it out. I took a stupid sell for no reason, and then I did get in the second trade perfectly, and then once with the stop loss below the body of this candle, once this candle came down, I moved my stop loss to break even. My target was slightly above here for a 1 to 2. It was like that. Moved my stop loss to break even, getting scared after the loss, obviously, and then obviously just had a loss. But it wound up going my way. And then, but I just changed my rules to one trade. I think that's what it is. With real money, this loss was like $130. Like my risk is like $130 per day. And I trade a live account and a live funded now. So I can only take one trade a day. One trade a day. I can't be fucking around like I used to, taking like 2 trades here, 2 trades there, you know, whatever. I cannot do that. I cannot. So now my new rules are just 1 trade a day, focusing on the good setup. So I'm paper trading again to just get the bearings about how good I pick the one setup. I'm pretty good at it. I got rid of my fake outs since last Thursday. Today I took this sell because we had our fair value gap here, a liquidity point on the 15-minute and 30 minutes, the only liquidity point up until this point here on the 4 hour. That's the 4-hour point of target, right? We, at the time, hit this gap, and then we reversed right out of it with great displacement, a full nice unicorn setup, and then it kind of came down for the data high and low, and then swept it. Everyone on the internet today has been saying that this candle swept their liquidity, this white candle. For me, it did not. I don't understand. Am I on the wrong chart? But that did not sweep this low. Am I tripping? It did not. That's literally not a sweep. But I don't know what chart everyone was on, whatever. It doesn't matter. So I thought about getting back in, but like I said, 1 trade a day. Follow your rules. Loss, whatever. However, if I did have my sessions indicator on, we were definitely sweeping the sell side of Asian in London to go to the buy side of Asian in London. But still, there's not really any good buy entries either. Let me delete everything. Because we get on at 10 o'clock, like I said. This is not for the 9:30 people. We had this 10 o'clock news. Technically, if you waited for the candle to close, some people were taking trades today on like the 30-second, the 15-second, and shit like that. I don't believe. I feel like you have to get that low on a chart, then you don't need to take the trade. But again, that's just my opinion. 1 to 1.5 is like the least I try to do, you know. And I don't think we even got it ever. So it was just a day not to trade, honestly. I did like that displacement though, so I'm not mad at that setup. But I wouldn't have traded today if I had my sessions on and seen that we're going up. because there wasn't a good entry for buys at all. A lot of people again went down on the 1 minute, and or they took invert for value gaps at 9:30 because they get on at 9:30. But from 10 o'clock, we didn't have a good setup, and that is fine. So I'm gonna, and I did say I wasn't gonna go live today, and I still went live. I actually do love live trading with y'all. I trade better, and it's fun. I can't really talk on the chat. I need to focus on trading, but I just now set and forget. Like I set the trade and I'm done. So I don't know if it's really worth getting on live, but I try to sit on live for like 30 minutes if I got an entry right at 10 o'clock, and then I get off. So all next week I'm gonna paper trade, see how I do, and then I'll go back to the live funds. But literally taking one trade a day has made me feel better already with trading. Like focus on one trade a day. So we're gonna go back to back testing today, and today I want to just let our whole range play out and then analyze it and see setups we could have took after. I don't want to do the guessing and taking trades like we usually do. I want to like let the next trading day play out, our 4-hour candle basically, and we'll see what it looks like on we'll go down to the 15-minute. Next New York session. And then I want to mark up only on the 4-hour. I don't really use the daily anymore. Maybe I probably should go back to using the daily, but usually there's just we're coming out of a gap here that's bullish. A liquidity sweep here. There's a tiny gap here, and then there is a red gap here. Then we're kind of bouncing off of. It's marked 10 o'clock, and then let's just see what the next candle does. We do have a gap here that we probably either need to inverse or bounce out of. So it could be, like I said, buys above here, sells below here. That's usually easy target when you're in a range of two gaps. But let's just see how it plays out. Okay, we're still not at this is 10 o'clock now. Looks like we bounced out of that 15-minute gap, but we could bounce off this gap. So usually, yeah, you either wait for a reaction off this or you wait for a candle close above that. But we're just going to see how it plays out. And if it keeps going, because it could, like I said, ping pong in this, and then you don't want that trade. You want a nice run. But boom. Decent run. Beautiful, beautiful, beautiful. Okay, like I said, bouncing off this gap. Again, this is the 15-minute chart, so you might not want that. I actually don't mind trading off the 15-minute chart. So we got a gap here, inversed. That would have been your entry. Candle close. Stop loss, probably above that candle. It's a 15-minute chart. Take it to the liquidity point down here. It hasn't hit it yet for almost a 1 to 3. Beautiful. And we had London and Asian lows actually. So you could take it all the way down to here if you wanted to. That's why, like I said, you gotta leave that sessions indicator on, because usually a nice trick too is, say we're like, these are the sessions right before New York in the same day technically. Well, this is the day before, but these are the Asian and London before. If we already swept the top side, you can kind of be looking for us to go down and take the bottom side of it. Kind of cheat code there to help. Like I said, 2 4-hour gaps. You just want to see the push out of this one, or a candle close above it, since we reacted off of it. Because sometimes I used to only sit and look at candle close above, like only inverses, when all you need is a bounce off. You need a bounce off or inverse. This is a nice bounce off, and it just ran down for a nice trade. And let's see if it goes all the way to London. Boom, it does. So you could have had a nice 1 2 4 trade. So again, that's it. That's all it really is. We've been having kind of weird price action this week. How are you trading on the aftermarket? I'm not trading aftermarket. This is FX replay, but also I trade futures. Today's Friday though, so the market is closed. But if this was Thursday or Friday or Thursday or Tuesday or Wednesday, you could trade Asian session. I don't trade options or stocks, but I'm not trading. This is FX replay. We're back testing. See that right there? We're back testing. The market is closed. There's no time. The market is closed. This is the back testing feature. So this is it. This is it. You can trade on the 15-minute chart if you want. On the 5-minute, let's see if you got a better entry. You do. So the gap on the 15-minute is this red one. On the 5, we have a smaller gap here. Candle close. It's a little better. It's not much better, but candle close there. Then you can have your stop loss higher. So, boom. That was the trade. And I told you, if you're confident in your bias, it is going to bounce off this like it did a little bit. It didn't stop you at break even, which was nice. It would have on our 15-minute entry, but if you move stop loss to break even too fast. But beautiful trade. Do you mentor? You explain very well. I don't mentor yet. I'm still 9 months into trading, and I just got funded. And I want to make some more money before I do fully mentor. But I do. You can book a one-on-one call with me. I do one-on-one calls if you want. A 20-minute call is like $20, and then a 45-minute call is like $40. I do that, yes. Or I do these back testing sessions. Okay, let's go to the next day. This is what you gotta do. Like, everyone gets so obsessed with back testing. Like these people they're not lying to you, but they just try to make you feel bad about, oh, set orders. How much money did you make? Like, you don't, that's not going to help you get profitable if you just keep taking shitty trades. What's going to help you profitable is this, like actually waiting, actually analyzing what happens in our session. Because as beginners, you have to simply, I was looking at Kuitha. I always bring him up because he's an unprofitable trader who posts a lot, and I just am like, dude, simplify your strategy. He's trying to trade too many sessions, and not too many sessions, but the whole New York session, which I used to do, and I used to be really good at it, but now I'm like, I just want to get on at 10, find a move, or you get on at 9:30 to 11:30. Like, you just get on a time and look for a move. Like, you don't have to sit from 7 to 12 like I used to do. Okay, it's looking like on the 4-hour we're going to these lows here, which is not, it's very close. So maybe we're either going to these lows and reversing from them, is what it's looking like, or we might keep going down. There is a gap here too, actually, that lines up, which is nice, because then, like I said, a reaction off the gap. All I trade is fair value gaps in liquidity. That's ICT. Like I said, everyone's like, ICT is so hard, he overcomplicates things. Well, no, he just gives you a lot of options that work depending on your strategy. Well, we already bounced off this gap once, so maybe it is a little. And then if we, again, inverse it, sell. Do you see what I'm saying? You see why gaps are just like so good? Because you can just say, oh, if it's a green gap, we need to bounce up from it. So that means if we inverse it, now we're going lower. You know what I'm saying? It's just that. And then where are we targeting? Liquidity points. Now, on the 4-hour, the next liquidity point is way down here. So I don't think we're going that far down, but let's see. Yeah, it's fucking far. But then there might be another liquidity point in the 15-minute in between. Oh, it's not letting me scroll back that far. So hopefully we bounce off. If not, you'll just take it for a 1 to 2 or something like that. And then on the buy side, we have no gap. We have no gap on the top. So let's just set a liquidity point there and a liquidity point at the high that was made before we got on the chart, which winds up being the London high, which is perfect. See how the charts just line up with each other? Alrighty, now you just see what happens. Alright, that shit ran up. Mark it, because it could be an internal. Any liquidity it can reverse from, just so you know. But you might want it to go up here. Let's just see how it plays out for us. Boom. Now we're getting a reversal from here. That'd be lovely. Which would look like a nice wick above, which it looks like it is. So now, what do we want? This fair value gap closed below, sorry, if we're going down. If we're going up, then it's going to push out of it. Same shit. So don't only look for the inverse, but boom, nice push out. So then maybe we might go up to that second one. There's a bunch of targets you can target on the upside. But we're not taking trades, so let me not get you to take a trade, but maybe that's the trade you take. Boom. That was the one. So right after that candle closed. That's not the best risk to reward, I'd say, because you technically have to have your stop loss below that candle. I mean, it doesn't want to keep going a little higher, maybe give you a 1 to 2. Sometimes it will. And does. Boom. There you go. There you go. See what I'm saying? So this is a liquidity sweep. A wick like this. This is a break of structure. Now, this is the 5-minute chart. I want y'all to notice this. Sometimes if you're on a different time frame, a liquidity sweep can trade up here and then reverse. So it is hard to say. But that was one of the 5-minute chart is a nice move. A nice move off the gap. Not just a move out of nowhere. Like this move. This move, I wouldn't take a buy out of this. And you see it kind of, whatever. But then you took a move out of a gap. It would have done the same thing underneath. You get in sales. No retest. I don't trade break and retest. The fair value gap is the retest. You make a gap. It retested the gap. And then it came out. So I don't trade break and retest. I just trade liquidity and fair value gaps. So I don't know. It wouldn't line up with this strategy. So I don't know. I can't tell you where a retest point would be. But fair value gap is technically the ICT retest point. That's also why I say I don't really trade fair value gaps in the sense of like my entry has to be in one, because sometimes it won't tap you in. Like if you wanted to get in the next fair value gap that was made, it wasn't tapped. But this one was tapped. The one after our entry, if you wanted to get an enter there, that's your retest twice. That is for fair value gaps. So yes, this is futures. This is futures, not, are you profitable? Yes, I just got funded. I got funded in 9 months of trading. So if you need motivation, you can. How are you trading? Oh, I already answered that question. A guy commented on my video today, said he got 2 payouts. He got 2 payouts in 6 months. Don't follow ICT. Follow who makes trading easier for you. So there's that. ICT made me profitable faster than any strategy probably ever would have, but that's just me. Honestly though, on the 4-hour chart, obviously this is the afternoon. This is the 10 to 2, then 2 to 4. We're probably gonna hit this. So it's what it's looking like before the end of the day. Okay, maybe not. But yeah, it doesn't matter. That's why I said whatever happens on your time frame. Top Step. I'm with Top Step right now. Then my next one's gonna be my funded futures. All right, let's go to the next day. But see how you really need the 4-hour, because the 4-hour, like people like the daily, which I get it, but the daily, you can't really watch it in real time because it has to close. For me, I don't trade all day. I trade for 2 hours. So watching the daily doesn't help because my move, the daily can end bearish, but my move is bullish. You see what I'm saying? So the 4-hour helps me know where are we going in this moment. This was liquidity number 1. It ran up a little past it. I'm sure there's liquidity here on the lower time frames. I would say FVG is an area and break and retest is normally a line. I agree. Can I use fair value gaps of supply and demand for a higher probability rate? I don't know because I don't trade supply and demand. Here, I know technically yes and technically no. Supply and demand is technically ICT order blocks. So it wouldn't really work with fair value gaps because you're waiting for it to retouch your order block. The only time I use order blocks or supply and demand zones technically when I'm looking for a reversal. So basically, I would buy as soon as we candle close out of your supply zones instead of like most supply and demand traders wait for it to come back and then they enter. For me, I just need a candle close out of my order block supply zone. So it's not the same strategy. Again, so I'm not gonna wait for it to come back. I'm getting in as soon as we break out of it. If that makes sense to you. Now, fair value gap just means if you miss your trade. So say you do wait for it to come back and it bounces, you get in off any fair value gap that you want. It didn't come into this one, but it tapped into this one. It didn't tap into this one yet. It tapped into, this one. It tapped into this one, just taps into gaps. So that's a personal thing, you know what I'm saying? Or the two don't go well together. They don't go well together, in my opinion. For me, so here's the thing, the difference. Like for order blocks or supply and demand zones, you will get nice big moves, but you will get them least often. Versus the fair value gap, you'll get more regular size moves more often. That's why I like to trade every day, and there is a move every day. Not really today. I mean, there was a move every day if I went in a lower time frame today. But for me, I like to catch the big move of the day. The 10 a.m. candle, like I said, is always the big move of the biggest candle of the day. Or the 6 to 10. So I like to catch this big move. Like I want to catch the big candle of the day is my thing to make my trading worth it. So your trading style is aggressive. It's not aggressive at all. It's very simple and reactive. And I made a video on my post tomorrow about that. Like to increase your win rate to like almost 100%, you have to be reactive. The market will tell you where it wants to go, and you just wait for it, and you'll lose a lot less. I don't even lose that much, and I just spiral when I lose, and that's what messes me up, and I have to like paper trade after a loss. And I had my first loss in like 2 weeks. Like, girl, please relax. But yeah, that's just, everyone's different. But yeah, just be reactive. Don't go. People ask me every night, usually when I back test, like, oh, what do you think's gonna happen tomorrow? What do you think's gonna happen next week? I will tell you this every time. I don't give a fuck. I get on at 10 a.m. just like this. 10 a.m. start. I actually get on like 9:55. I do analysis in like 3 minutes. I get on at 10 o'clock and I see where we're at and where we're going. We swept Asian and London lows, so we probably might go up. We could continue down this 4-hour gap. So we can either trade down to the gap, because we had a lot of trades like this week. We traded down into the gap at 10, and then at 11 or 12 or like noon, there was a big reversal at the end of the day. That happened like 3 times this week. So obviously you do with that what you will. So we'll see if we get a push to the downside. If not, you can wait for it to come to this gap. That's what it's giving me. We have equal highs. So we'll go, these are the same, they're close. I mean, if you want both, but they're super close, so you might as well take the second one. But yeah, you just get on that 10, and then for me, it's like whatever happens right now is what I'm focused on, because I trade for like 30 minutes, an hour, or 2 a day. I'm not trading all day. I'm not seeing the charts all day. As a beginner, you have to simplify it for yourself. I just know 10 a.m. gives me the cleanest price action for the most part, and then I got funded. I got rid of my fake outs. And then sitting on higher time frames. Obviously, this is the 5-minute chart over here. But I usually sit on the 30 and the 15 and the hour before I get on the 5. Unless the 15 and an hour are very unclear, because sometimes they are. I usually sit on a higher time frame. And it'll give me like another gap that I can really... Now, if we bounce off this or we're inverse, we can take it down. Like, it gives me like something else to target. Boom. Then Oreo get trades like this on the 15-minute. Well, actually, this happened before 10 o'clock, so we don't even give a shit. But sometimes the 15-minute will just run without you, and it sucks. But it doesn't matter, because it's before 10 o'clock. I don't enter until after 10 o'clock. So if we invert this gap, let's see if we inverse it or we come out of it at 10 o'clock. All right, boom. Inverse. This is probably the first 5 minutes at 10 o'clock. Okay, that's 5, 10 minutes, and so this candle close, you'd probably get in a trade. Where's our sell side target? You have this 4-hour low here, boom, and then you have another prominent 4-hour swing low there. So you can get in your trade here and see if it goes down. Let's see. Now it could reverse out of this gap back to the other side too. So I'd wait for a full candle close. This candle's not done yet because we're still playing it. That was a nice candle close though, just so y'all know. And this is just trading sideways. This is a higher time frame gap. Boom. Second one. Are we gonna get it? I always take profit the first one, because you never know if it's gonna go to the second one. And for most of us beginners, this money lost sometimes. I mean, this is a good move. I probably wouldn't sell. I only sell like if we reverse a little bit after I got in, but you should hold your trades, because look at that. And how would you know that? This liquidity point on the 4-hour. This was just a 4-hour candle low, but the swing low target on the 4 hour was this one. There was no other swing low before. This is the next one. Will it go to the next one? It might, but we're already at 3 o'clock. So that was the trade. I didn't mark it because I wanted to focus on learning. Another big stop loss. Y'all know I hate these big stop loss trades, but I've gotten so used to them at this point. Like, one person was on my live before I got funded, and he was like, 1,000 tick stop loss. That's wild. And we were way up in it. It was trading all up in my stop loss, in my drawdown. And then boom, 10 minutes later it ran down and I made $1,000 on my funded account and got funded. That's why I'm like, it doesn't matter. Like, you have to leave your trades. This is a big ass fair value gap too. Or, like I said, if you're a fair value gap trader, which I used to be, you would wait for it to come back into the fair value gap. So your entry would have been up here. So it's a little better. It's a little better than mine. But for me, sometimes it doesn't come back. Sometimes it just runs without you. So I usually just get in at the confirmation. That's it. So you just basically, what size drawdown do you, it varies. My drawdown varies from my ICT trader. So sometimes it's big because look how big this candle was. You had to let this trade play out. So it would have been above this candle, sadly. And then obviously, say I got in, down here, my stop loss would be the high. And I usually move it. Like, if we tapped into a value gap and we came down, I might move it. But that day on Tuesday I got funded, it was like trading very shitty and sideways for a long time. This isn't that bad. And I knew, which is an ICT trick, y'all. If you're trading sideways for a long time, but you're still confirming your bias, then you're waiting for an internal liquidity sweep just like this. And then it finally ran down. So that's what happened to me. But it happened with me, it happened way up here. So I was like, fuck, I cannot move my stop loss. So I wouldn't suggest moving your stop losses to swing lows until after you push. But there will be days where it's trading sideways and it's very shitty. You're like, what the fuck? And then, but if you're still confident, you're like, okay, now I need a liquidity sweep. Like, give it another liquidity run to grab to then push down. And then it did it. I think I can show y'all what it was. It was nasty work. Truly nasty. It was this. No, that was Thursday. It was Tuesday. Because Wednesday I took that long, which was beautiful. Yeah, it was this day. Look how shitty this was for the longest. And we didn't get our confirmation until this candle closed. So this was my trade. I got in as soon as we got candle closed. And I felt like, no, it was this display. Where was it? No, it was this. It was this candle close here. Yeah, it was this candle close to these lows, and then my stop loss was above the high. It was not great. It was like a 1-to-1, honestly. And then we obviously traded sideways. We almost came out. This is a 1 minute fair value gap that it tapped into for once, and then we traded sideways. You see this whole thing. We traded sideways, but then I was like, okay, we need internal liquidity sweep. Once we swept this, we fucking ran down. It just, sometimes it just wants to trade sideways very shittily, and then you just gotta wait for another liquidity sweep to go your direction. If you're in drawdown, that's a little cheat code for if you're in drawdown. Do you trail your stops? Fuck no. I started trailing my stops, and it ate so much of my profit. It actually makes me mad thinking about it. I'm an ICT trader, so you know the chart, or even just regular price action. The chart zigzags ups and zigzags down. So you're going to have a trailing stop at this take profit. This pullback came, even if you move your stop to break even, stopped you out for nothing, and then it ran your way. Why would you do that? Like, if you're going to trade like this, especially because I trust my strategy, it's so good. My analysis is so good. My only problems are emotional trading sometimes, that you're going to win way more than you lose. Even when I trade shitty, my wins are more than my losses. But when I trail stop, my losses are bigger than my wins. And that would piss me out. And that eventually made me unprofitable. I'll let my trade fully play out. But with a trail stop, this move is normal. This is a normal pullback until this fair value gap. If you're an ICT trader, you know that. It's coming to some gap. So it's like you made no money. I mean, it's better than a loss. Stop loss at break even, but you got stopped out and then it ran your way. You can get back in if you want, but for me, my new rule is now one trade, so I set and forget. And then your win is still bigger than what you're risking, and over time, it's still going to be bigger because you're going to win more than you lose. See what I'm saying? Can you get out of contract early? I'm used to trading forex and binary. Yes, you can close whenever you want. There's no need. You don't have to hold anything. I just walk away. Because if you get out early, it depends. There are days where like, yeah, it'll come like down here and then reverse. But that, you have to look at the 4 hour. The 4 hour we were going, or if you need another one, you look at the hour chart or the 15-minute chart or the 10 or the hour. And then, you know, even on the 5-minute, liquidity here, the next one is this swing low. There's no reason to sell before you hit this low. So yes, but you can always close your trades early. There's nothing wrong with that. You can never not close a trade early, no matter what you trade. But yeah, using a trailing stop, I would have been funded and profitable so much fucking faster. I just started like not wanting to take losses on my funded account. So again, I would trail my stop and lock in. And everyone's like, oh, that's dumb. Like, you demand your trades. No, you don't. I mean, if you trade like supply and demand or something, maybe. But liquidity is all you need. It goes to liquidity and it goes to fair value gaps. It does it. I've seen it happen for a full year now. It's all you need. If you need to sell at this one. And then if you want to hold, sell at this one. If you want to do in the middle and YOLO it, you can do that as well. I don't suggest it all the time unless you just have a really bad entry. Sometimes you just have to do what you got to do. But for the most part, you can take a liquidity point. Now, if it's going to go to this one, that is above us. It probably might, but I don't care. We don't care. We get our money and we get off the chart. Again, this is the beginner friendly. Because I love Tanya trades, but I cannot watch her trade because she sits and she's so patient. And I just like, oh yeah, one day I'll get there, but I cannot. She'll sit till like 4 p.m. and just wait for like a good setup. And I'm like, but I like to get on a time where I know a good setup is going to be. So I learned that 10 a.m. is that. For me, it's the biggest candle. This day it was not, but it's just a good candle. Key Flow Trades is the one who put me on that. And everyone's like, oh, I told you to trade a higher time frame, da da da. I'm like, no, it's not necessarily just trading a higher time frame. It's pretty much, okay, and we did take that low. It's very much just trying to trade that candle where that candle's going. Okay, so now we had this one down here, and we have this one down here. And then we do have the tiniest fair value gap, so maybe this is where we're trying to go. This is pretty far down though, but we'll see. I'm not confident we're going all the way down here, especially this is the 4 hour chart. So maybe we're coming and we're bouncing. That's also just a thing, an experience thing. Like sometimes if the target is so far, you're probably not going there. But sometimes it does go there. Sometimes it just runs like this. But this is like almost like 24 hours. You know what I'm saying? It's not going to happen in my little 2 hour trading time is what I'm trying to say. But let's see. Good liquidity. We could come here. We could bounce. And then there is a gap here that's about to be made by this candle. Let's see what happens. Mark 10 o'clock, and you can oh fuck, I didn't do next New York session. I always do that. So it did hit that liquidity point at the end of the day. Here we go. That looks better. See, bounce from that line, like I called it. Just how the market works. Simple price action. Bounced up from that line, going to that gap we marked. We just didn't go to the next day. So, but you see how that, and that's also why I don't call things the day before. You saw a prime example how I said, oh look, it's going back up at this point. But this happened before we got on the charts, so it doesn't matter. Like I don't trade at this time, so I don't like saying that to people, because if you get on at 9:30 or you get on at 2 p.m. in the afternoon, like everything I said is gonna happen tomorrow happened before either of us got on the chart. Unless you're gonna trade 6 a.m., then it doesn't matter. It doesn't matter. All right, let's continue. So now we're waiting for what? A bounce off or a bounce through, or continue straight through. Nice bounce off. So this could be a sign to get straight into sales as soon as 10 o'clock happens. And there are days when that happens. And then we have what? London lows. We have equal lows here, which is beautiful. And then you have Asian lows here. Can be your target. If you need another confirmation for entry, you have a 5-minute for value gap here that once you close below is your entry. I hope that makes sense to people. Bounce off of it. Again, it's not even 10 o'clock. So like I said, we'll see what we get at 10 o'clock. Boom. Inverse before 10 o'clock. So right at 10, we can get in sales most likely. But ooh, this is why you wait till 10 o'clock. I always say no trades before 10 because look, that looked clear to you. And then it can just 10 o'clock can actually demolish anything that 9:30 did. So let's see. And then you'd be stopped out already because your stop loss would have been this swing high. So actually it did when it bounced off and go higher. So now we're waiting for candle close out. Boom. In buys. Target. There's a whole gap up here actually. Target the middle of this gap, probably. Let's see, could be a day we're wrong and that's fine. You're gonna lose some. Boom, so it's a day where, yeah, you would have just lost either way because say you were confident in the sells, your stop loss would have been this high. If you got in the buys off this candle close, obviously you would have been stopped out. You could have got back in, but like my new rule is 1 trade a day. And this is just something that, so obviously our sells were right. And this is exactly what I was talking about when it comes to liquidity sweeps or like closes above things. It can liquidity sweep and like close kind of high, like go up high and then reverse. So this would be a day where your bias will kind of come in handy. Because see on the 4 hour, it's a nice big wick. It's a nice liquidity sweep. But on the lower time frames, it looks crazy. And this is why I started sitting on the higher time frames longer because look, let's see what the 15-minute and the 30-minute look like. Okay, the 15-minute looks like a full candle close above. 30-minute as well. And the 1 hour looks like a wick. So you're on the 1 hour. That day we probably all would have took that first or that second trade, honestly. So we would have just, market would have just went to play with us that day. Or if you are a patient trader and you had a nice bias, you just would have waited for it to finally reverse again. Or you could have just took 2 trades and broke your rules if you wanted to. I don't mind breaking my rule if it's a clean setup. That's a clean setup to the downside, and then you could target the London lows like it's going to. But see, like this nice inversion. I also try if they're there, take an inversion off of the 15 or 30 minutes. So there's not one here for us, and it did bounce up off this. So this move just probably would have got us, honestly, for most of us. And that's fine. I really look at things as a beginner. Like as a beginner, I would have took that buy as well, or even took the sell right at but I usually let the 10 o'clock candle play out unless I have a nice displacement candle that's right before it. Then I'll take a sell. Like the red candle has to be like a nice big red candle like this, and then I'll get in right at 10 o'clock. But that's the thing, you know, you win some, you lose some, and or you would have got back in and made all your losses back anyway. Let's see if it goes down all the way to Asian low. No, it didn't even go to London low. So yeah, this day is just playing with us. Yeah, it's just playing with us this day. So yeah, some days it does this. That's okay. And this is the day where, yeah, I guess if you had a trailing stop or you move your stop to break even, since it didn't go to your profit, you know, you would have saw this and been kind of upset. But it still went to this one. You could have just targeted this liquidity point. Like I said, I don't always target London lows and highs, but, you know, you'll learn. You'll just learn. And or, you know, you'll just sit on the chart and check too. I agree with focusing on higher time frame. Maybe try 24-hour time frame. No, I don't like that. And I don't like 9:30 candle, but thank you. I used to trade 9:30 candle, and that made me unprofitable as fuck because there's a lot of fake outs. I just trade the 4-hour. Like I said, I don't trade long. I get why people like daily buys, but if you only trade for 2 hours a day, there's no need. A lot of the people who trade daily buys sit on the chart all day. I personally don't. I just need to know where that 10 a.m. candle is gonna go. This is the only candle I trade, and not even the whole candle. I trade like the first 2 hours. So I'll, like, sometimes it'll move like this sideways. I'll just trade one move, and then some people will trade the up move. You know what I'm saying? Like, I don't need the daily, or I don't trade at 9:30 anymore because it fakes you out a lot. There are times like this where it's a good trade, but like today or yesterday, like the 9:30 traders were cooked. But and I also trade at 10 because it lines up with the ICT silver bullet. It lines up with the 950 to 10:10 macros. It lines up with the 10 to 2 4-hour candle. So it's just a lot that happens here for strategy. That's why I trade at 10. Now, if you like the 9:30 open, again, good for you. I did see the moves often, but I also saw fake outs more often when I trade at 9:30. So, and not fake outs like just me taking shitty trades, like actual like fake outs, like a market trigger shift to the downside, liquidity sweep, then it goes back, sweep stops you out, goes against you a little bit, but then still go your way, and it's just like I wasn't gonna keep doing that. Like I said, that's what I said. Whatever works for you. As a beginner, fine. If 9:30 is your time, it's your time. One of my not students, but people who have been in my, what do you call this? My lives. People who have been watching me and like part of my community, I guess. He finally is trading the macros now. He's moving to 950 to 10:10. Like I told you, he's been trading at 9:30. He's been getting cooked. He's been getting fried at 9:30. So he's finally not doing 10 o'clock, but he's doing the 950 to 10:10 macros. But he's also an ICT trader again. If you're not, you don't really know what those times are. Yeah, I agree. I like the 9. I like to let the 9, the 6 a.m. to 10 a.m. candle close. Like I said, I watch the 4-hour chart, and then I like to see where it closes. Yeah, there are times where 9:30 can really set you up nicely. All right, it's looking like we're doing to go lower. That's what I got from this. Some days it's obvious, but let's see. How far low? It's a nice low, but again, we're getting at 10 o'clock. That's why you wait. And you obviously this is replay, so candles are gonna play out. Now we did inverse this, and then we have highs here to target. So let's see if it goes higher, and then that's the Asian high. We're already almost there. It could revert. It could also do that too. You know, I originally started at 10 a.m. for 10 a.m. reversals, but now I know when to play continuations and when to not. So it could come up to any of these and reverse. For, you know, the old school 10 a.m. reversals. That's what the silver bullet is. It's a 10 a.m. reversal. Okay, boom. This kept running. That's why I marked it. Because why? The 4-hour told me we want to keep running. That's our candle. Already ran up a lot. So you would have probably you could have got in. This is what I was talking about. Remember I said there are times when you'll know when to get in right at 10 o'clock. When that candle is a strong, big candle in either direction, not indecisive, this is when you can get in right at 10 o'clock. This is an example. I know like, sometimes the candles look big, like not one of these, or honestly not even one of these, like a really big candle like this, you could have gotten in right at 10 o'clock. Let's see how far it goes though, because it could reverse from here and do a thing. But see, it pushed a little bit. Let's see if it keeps pushing. And then there is a candle high here. Oh, yeah, this is a gap. Sorry, I didn't mark this gap up here. This would have been a gap to target. That would have been your target. So right at 10 o'clock, boom. That's your target in the middle of the gap, maybe. Maybe we go through it. I don't know. Stop loss. These big stop losses. That's the only thing about these big candles. Your stop loss is big. But like I said, at least like get at least the one with 1.5. If I can get 1.2, great. Does it keep going higher, or does it finally reverse out of the gap? Like it should, because it's a bearish gap, but it could go higher. Like I said, pulled out the gap, and then again the candle now. 4-hour candle's done. This is 2 p.m. now. I'm off the chart. See what I'm saying? So there are days where you will just get in at 10 o'clock, and this is what it looks like. Again, if not, you don't have to take the trade because you wouldn't have got any other entries. Maybe the 5-minute would have gave you some kind of fair value gap tap. It did not. It ran without you. That's why I don't trade fair value gaps anymore, because it just ran without you. And that's okay. It does that sometimes, you know? That's just how the market moves, and you'll learn that. How was my trading today? I took a loss, but it wasn't the market wasn't that great, so I took a loss, but I paper traded today, and I'm paper trading next week because I'm doing one trade a day. So making sure I can actually take the good trades and wait for them. So yeah, I took a loss today. It was not much price action for the higher time frames like I like to trade. But yeah, this is it, y'all. This is how you trade. You just get on the 4 hour, see what liquidity points it wants to go to, gaps it wants to go to, because on the 4 hour it's gonna go to them in that day. The daily time frame is what I don't like, because if you're on the daily, we could be looking like this on the daily, but then our candle could go just to here. You know, it's the day, and it's not gonna look like 2, 3, 4 candles versus like the 4 hour. You'll at least get like 2, 3 candles, 1 to 2 candles in your session. Obviously, the hour you'll get more candles in your session. So, and then obviously you could have moved your stop loss up as it ran up, but and on higher time frames it usually fills the middle of the gap. Lower time frames it might not, but you can target the middle. Sometimes even the full gap if you want. But the middle is always safe. If you're feeling super scared, then obviously just the bottom. That's what you want. And that is that. So yes, I will be live trading again, but I'll be paper trading next week. And then doing this. And then obviously I do back test every night. I didn't last night, but we'll continue back testing just like this. Perfecting the craft. Getting your this is how you get your emotions good. Back testing your strategy. FX Replay is the website if you need it. It's $35 a month. If not, obviously I'm here every night. But obviously for me, I'm going to backtest my strategy. So if you don't like this, then you probably should buy it for yourself. But yes, I will see y'all tomorrow. If you have any questions, you can DM me or things y'all want to see when we backtest. Let me know. Obviously, when I trade live, there is no input because I have to do what I got to do, especially now that I'm trading with real money and it's scary again. But yeah, this is it, y'all. Just liquidity, fair value gaps. That's all I use to trade ICT. I know he's scary, and I know it's a lot of concepts. And when you hear ICT, you think it's just this Bible of information, which it is. But you don't need it all. You just need fair value gap, liquidity, swing highs and swing lows, and then obviously you kind of need like market structure shift and change in state delivery for reversals. But sometimes you don't get reversals. Sometimes you just get in and you take it up, and that's that. And that's fine. So yes, I'll see y'all tomorrow. Also, TJR is still a racist. I just found a new video of him being racist again. So again, I cannot tell you to support TJR ever again. He did have a nice boot camp that I did watch back in the day, but he is a racist. So not shocked though. Most of these people are. So is Patrick Whelan, also racist. He's been arguing with ICT on Twitter. It's been actually very comical to see the traders on Twitter fighting. But yeah, I'll see y'all tomorrow. Let's be a lady.